Ladies and gentlemen, good day, and welcome to the Nazara Technologies Q3 9 months FY23 earnings conference call hosted by Elara Securities Private Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Karan Taurani. Thank you, and over to you, sir.
Thank you, Mike. Hi, everyone. Good morning, and welcome to this call of Nazara Technologies Q3 FY23 and 9-month results Concall. Please join me in welcoming the management of Nazara Technologies, which is represented by Mr. Nitesh Matterson, who is the Joint Managing Director, Mr. Sudhir Kamath, who is the Chief Operating Officer, Mr. Rakesh Shah, Group Chief Financial Officer, and Ms. Anupriya Sinha Das, who is the Head of Corporate Development. I would now like to hand over the call to Mr. Nitesh for his opening comments. Over to you, sir.
Thank you. Good morning, everyone, and a very warm welcome to all of you to Nazara Technologies Q3 and 9-month FY23 earnings call. I would like to start by wishing all of you a very happy new year and a fantastic 23 ahead. I have with me Sudhir Kamath, our Chief Operating Officer, Rakesh Shah, our Chief Financial Officer, Anupriya Das, our Head of Corporate Development, and SGA, our IR firm. We uploaded our result presentation on the exchanges, and I hope everyone has had the opportunity to go through the same. Coming straight to our financial performance, we generated of INR 8,017 million in 9 months FY23, which is up 80% year-on-year. Our EBITDA came in at rupees 820 million for the 9 months and a PAT of INR 558 million, which is up 22% year-on-year. For Q3 FY23, we generated revenue of rupees 3,148 million, up 69% year-on-year. Our EBITDA came in at rupees 306 million and a PAT of rupees 224 million, which is up 31% year-on-year. This performance is in line with our stated goal of driving fast growth through reinvestments into the businesses while maintaining healthy profitability and positive cash flows. As we anticipated earlier and also mentioned in the last earnings call, it is heartening to see that our flagship product for young children, Ethiopia, came back on a growth path. Ethiopia subscribers grew by 3.7% in this quarter, while revenue grew by 21%, aided by the price hike we had taken in the earlier quarter. We also undertook another price hike in this quarter on December 1st, and we have not seen any material negative impact in our core KPIs that we track, and this makes us confident that the benefits of this action will accrue to us in the coming quarters. I also want to highlight that our recent acquisition of DataWorks in the AdTech space is performing well and has seen its revenues increase by 55% year-on-year to rupees 1,182 million for the first 9 months of FY23. Our businesses in Nodwin, Sportskeeda, Nextwave, and OpenPlay continue to perform well, and we are working closely with the WildWorks team to ensure that they get onto a fast growth track at the earliest. A lot of the work we do with these businesses is instilling the Nazara DNA in each of them. This includes focus on profitability, a long-term mindset, and enhanced governance. As long as we continue to drive these aspects, I fully believe each of these businesses will continue to drive long-term compounding of value for us. We have also made several key hires across our businesses over the last few months, as we see the present market downturn as a good opportunity to attract good talent for ourselves. We have recently created a special projects team that will work closely to analyze and execute new opportunities that we want to pursue, including new tech trends such as Web3 and generative AI, with an intent to use them to our advantage across our businesses. We also continue to evaluate various M&A opportunities across the 5 verticals we operate in, and we will not hesitate to make fresh investments if opportunities fit our value creation framework. I look forward to the continued support of all our stakeholders as we continue to pursue our long-standing commitment of Nazara playing a significant role in India's journey towards becoming a global gaming powerhouse. Now I will request Anupriya to talk about each of the businesses in detail, and thereafter we will be happy to answer all your questions in detail as well. Over to you, Anupriya.
Thank you, Nitish. Good morning, everyone. In terms of our segment performance, esports contributed to 49% of revenue, while gamified early learning and AdTech contributed to 24% and 14% of revenue, respectively. Freemium and skill-based real money gaming contributed to 2% and 5% respectively in 9 months of FY23. Now moving to esports, for our esports vertical, which consists of Nodwin, Sportskeeda and PublishMe, our revenue grew by 84% for 9 months FY23 and 40% for Q3 FY23. During the same period, Nodwin revenue grew by 98% in 9 months FY23 and 53% year-on-year growth in Q3 FY23. Nodwin witnessed growth in revenues led by offline events such as DreamHack and its 7 Weekenders, as well as creation of new international IPs. EBITDA margins in Nodwin were lower due to significant investment made in creating these new IPs, as well as negligible margin contribution by the gaming accessories business that is still in high growth phase. Benefits of operating leverage will kick in as we scale revenue. Our own IPs and media rights revenue to show non-linear EBITDA growth as IPs scale. Also, the D2C business will become even more margin accretive once brands are well established. Revenue growth of 59% in 9 month FY23 compared to 9 month FY22, owing to strong growth in revenue from the US market, where Sportskeeda scaled its video business and strengthened text offering in core American sports like basketball, American football.
Ms. Anupriya, can you hear us? Ladies and gentlemen, yes, ma'am, we can hear you now.
Yeah, sorry, was it not audible in the internet?
Yes, ma'am.
Okay, so should I?
Anupriya, just continue.
Oh, 8% growth in December 2022 versus December 21, while it also saw a significant increase from 2 minutes 48 seconds in Q3 FY22 to 5 minutes 3 seconds in Q3 FY23. Gamified early learning. This vertical consists of Paperboat and Wildworks. As Nitish mentioned, we are very excited to report that Kiddopia is back on the growth track, both in terms of subscriber growth and revenue. Subscriber growth for the quarter has been 3.7%. They increased marketing spend to $3.4 million in Q3 FY23, while maintaining CPT at $37 per user through channel optimization for the user acquisition spend. Kiddopia has also taken another price hike in the beginning of December, and we have not seen any of our key metrics regress. Churn is 6.5%, 9% in Q3.
Sorry to interrupt, ma'am. Your voice is breaking in the between. The words are not clear. If you could repeat the sentence once again.
Sure. Kiddopia has taken another price hike in the beginning of December, and we have not seen any of our metrics regress. In fact, churn has declined from 6.5% in Q2 to 5.9% in Q3. Our revenue growth for Q3 FY23 has been 21% year-on-year. Like Nitish mentioned, Wildworks is a work in progress. We have reported revenues of INR 298 million with EBITDA of around 19 million in 9 months FY23. We are working on optimizing user spend across channels and working on product level updates to drive higher engagement and monetization. Moving to the AdTech segment, the AdTech revenue grew by 55% year-on-year in 9 months FY23. 31 new clients were added in 9 month period, contributing to 31% of total revenues during the same time. And now move to the freemium segment. The revenue grew by 38% in 9 month FY23 over 9 month FY22, driven by 48% growth in ad revenues and 14% growth in IAP revenues. EBITDA margin increased to 29.9% in 9 month FY23 on account of revenue growth as operating expenses remained constant. We are in the process of ramping up the core team in next wave to help drive the next stage of growth for our business. Moving to the skill-based real money gaming, asset called OpenPlay. Revenue growth of 28% in 9-month FY23 as OpenPlay works on optimization of product. We also note that the new proposed IT rules, which are the first steps towards clearer regulation of this sector. As part of the public consultation, we have shared our feedback on some aspects that need further clarity, but overall, this is a great step. Moving to the telco, for 9-month FY23, the revenue has declined by 16%, while EBITDA grew by 2%. We have been able to continue optimizing cost in this segment to drive higher EBITDA. I will close my remarks here and would like to open the call for Q&A and request Nitish, Sudhir, and Rakesh Shah to join me for the Q&A.
Thank you. We will now begin the question-answer session. Participants who wish to ask a question may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. We have the first question from the line of Rahul Jain from Dolat Capital. Please go ahead.
Yeah. Hi, is my line audible?
Rahul, your voice is not very clear. If you'll go off the speakerphone once.
Just a second.
Okay, Mr. Rahul has left the queue. Participants who wish to ask a question may press star and 1 on your touchtone telephone. We have the next question from the line of Abhishek Kumar from JM Financial. Please go ahead.
Yeah, hi. Good morning, everyone, and good to see growth back in Kiddopia. So the first question I have is on Kiddopia. First, it looks like the growth has come at the expense of margin, which is not bad. But I just wanted to understand. We have been taking price hikes for last couple of years. However, the blended ARPU seems to be quite stable. So I just wanted to understand what is driving this. And second, are we now comfortable with this kind of CAC, which seems to have stabilized, and therefore we can push for more user acquisition through higher marketing spend?
Hi Abhishek, this is Nitish. I will answer both your questions. So I think if you see the ARPUs, right, the most recent price hikes have happened in the last quarter and the starting of December. What is important to understand is that the price hikes impact only new users that we acquire and not the existing subscriber base. So you will see a trend up of ARPUs over a period of time, which you're actually seeing. If I look at Q3 FY21, we were at $6.3 average monthly ARPU. It now increased to $6.8 on an average in Q3 of FY23. We're seeing a gradual increase, and I think the back-to-back price increases that we've done in the last few months will probably show a faster increase in ARPUs in the coming year. I think that's one point. I think on the CAC side, we are quite comfortable with the current range of CAC, especially adjusted for the price hikes that we have done. If you also see, our CAC was $39.3 in Q1 of FY23 on a spend of $2.7 million. We increased our spend to $3.1 million in Q2, and the CAC actually came down to $37.9. And in the current quarter, the CAC has actually down to $37.3 on an increased spend of $3.4 million. So I think both these trends are very positive, right? We are increasing our marketing spends quarter on quarter, and at the same time being able to optimize our CAC, which will also lead to margin expansion. So I think overall we are quite satisfied with the way things are playing out for Kiddopia, and are very hopeful that this growth will pick up pace in the coming quarters.
Great, thanks. So just to clarify, before I move on to my next question, should we build in the same level of marketing spend, going forward every quarter, or would you increase or decrease it as you go along?
We would like to increase it, provided we are within our guardrails of a CAC. So I think if the opportunity does arise and we are able to efficiently spend the money to acquire users, we will surely increase it.
Great. Now my next question is on esports. So sequentially the growth was not very strong, given Q3 is traditionally the seasonally strong quarter. And my understanding is, you can correct me if I'm wrong, is because last quarter was seasonally strong for the accessory business. So given that accessory business is not very margin accretive, there should be a strong margin expansion which has not come through. If you can just explain me why the margins have still not gone up, and when can we expect margins to go back to historical levels of 6 to 7% in this business?
That's true. So I think there are multiple things happening here at Nodwin, which is kind of suppressing the margins in the interim period. One is, even in this Q3 quarter, we've seen revenues come from the gaming accessories business, as well as some of the new IP that we've launched, such as Playground, which remain today margin neutral, I would say. So there's a significant growth come from those areas which have not contributed to margins. The other aspect is, really speaking, many of the real world events are also coming back after a long time, and they will take I think a few quarters to get back completely up to speed in terms of efficiencies. We have introduced new games in these events because of some of the games that kind of got banned earlier in the year. We focused on new games and new development of IPs around that. So I think that has also kind of hurt the margins a bit. Our focus on Nodwin right now is to develop multiple businesses around that, putting the gamer in the center, and make sure that we're able to, through that business, kind of cater to his needs on a 360-degree basis. So from our overall Nazara portfolio perspective, the way we are looking at Nodwin is, to continue to drive market leadership in the key areas that they are operating in, while many of our other businesses right now focus on contributing to margins. So I don't have immediate visibility on when margins on Nodwin are going to really come back to where they were or enhance. So I would not like to give any guidance. The last point here is also for addressing a lot of these areas that Nodwin has got into. Nodwin has been hiring some senior teams and key hires over there, which have also kind of added the costs on the team side to them. So I would think of these as medium to long-term investments, and we're very happy to support this business to continue to grow strategically for us.
Great, that's very helpful. Thank you, and all the best.
Thank you. We have the next question from the line of Jinesh Joshi from Prabhudas Lilladher. Please go ahead.
Thanks for the opportunity. Sir, I have a question on esports. I think recently the Government of India recognized esports as a part of a multi-sports event. So basically, what is the implication here? I mean, will there be any budgetary support from the government here to train the players, or is this move basically just a veto so that more people take up professional gaming as a career option?
Yeah, hi Jignesh. So I think any step taken by the government to recognize esports is a highly positive step for us, right? I think the multi-sport recognition is just one step towards what we would really like to see esports recognized as a standalone sport on its own feet. And I think we will get there sooner or later, and this is a good step towards that. I think just categorizing and calling esports as part of a sport, right, allows a whole ecosystem to build around it, which includes professional athletes, better training, serious participation in global events, which then would lead to increase in fan base in India, which would mean increase in viewership, potentially helping us on media rights, etc. So I think it's a whole ecosystem building. And this is certainly a step in the right direction, but there's a lot more we want to happen.
Sure, sir. Sir, my second question is on OpenPlay. If I look at our MAU, they have declined from 27,000 odd in September to approximately 23,000 odd in December. And this is despite the fact that Google has now allowed Rummy app to be listed on its Play Store. So is there any specific reason for this decline which you would want to highlight?
I think our focus has been on, kind of on OpenPlay, on deep diving on our valuable customers and really enhancing their ARPUs and setting our, systems and our processes and our funnels right so that as we scale our user base, we are very efficient in our operations. The update on the Google Play really is, it's a work in progress. We've launched our Google Play app. However, there was a lot of friction on the KYC process, which means there's still some enhancements being done there for us to really gain benefit of it. Early signs are very positive. We've seen that the quality of customers we are getting from Google Play, the ARPUs, are much better. We are recovering, kind of 20% of our first-time depositor cost on Google Play app versus we normally, recover 10% in the first month when it's off Google Play. So we're very positive about this, but this hasn't gone mainstream yet for us. We're hoping that maybe by next quarter, we will really be able to scale up the Google Play opportunity and start, showing better results from there.
Sure, sir. One last question, if I may. Sir, can you give us some color on how Wildworks has been doing, especially in terms of KPI? Because I think it had a subscriber base of about 1 lakh with an ARPU of about $8 to $8.5. So has there been any improvement here like we have seen for Kidopia? And any specific number you would like to give on marketing spend here as well?
In Wildworks, I would say it's completely a work in progress right now. We are trying to bring a lot of the learnings of Nazara to Wildworks. We are working very closely with the team. The first thing we did was, bringing up someone senior in the data analytics team. There were a lot of fixing to be done in terms of how we are capturing the data. A lot of the data that we were capturing was not accurate. So I think we have been kind of fixing the hygiene over there. We're also creating a strong product roadmap that we feel will be, valuable to the end consumer. And lastly, we are also evaluating pricing strategy over there because Wildworks has not, increased prices for a really long time, and we see a low-hanging opportunity there. So all in all, I would say there's still a lot of work going on, and therefore a lot of the data points that we have or that we have shared in the past also, right, may not be the right reference point. I think we are hopeful that by next quarter, we will be able to show, more accurate data over here, as well as positive momentum and traction. Overall, this quarter contribution in revenues has been strong for us, and we've seen good growth. But underlying, we see a lot of opportunities where we can work on and improve. We continue to be very excited about this opportunity with Animal Jam being a fantastic IP. And we're very hopeful that FY24, we will really see, Animal Jam and Wildworks perform very well for us.
Sure, sir. Thank you so much and all the best.
Thank you.
Thank you. We have the next question from the line of Rahul Jain from Dolat Capital. Please go ahead.
Yeah, thanks. Sorry, I got dropped earlier. Firstly, on the Kidopia side of the business, since now the churn is stable, declining rather despite the price hike, and CAC is also getting optimized. Now, what kind of growth one should see in the subscriber? What kind of anticipation one should build going into this calendar or next fiscal? Any input on that would be helpful.
Yeah, Rahul, it's a bit early for us to make forward, guidance on that because this is the first quarter where we've kind of come back on growth. But like you rightly said, all the parameters are indicating, a lot of potential, declining cost per trial, increasing ARPUs, and reducing churn, right? The team is also doing a lot of work on the product side. So I think it's not just the pricing strategy, but also the efforts that in the last year we have put in on the product that are starting to show some, benefits. So I think right now the guidance to the team is, let's not be in a large hurry to spike spends. Let's just keep doing what we're doing with our guardrails on. As long as we are acquiring quality users at the right price that we are willing to pay, we can surely increase the amount of money that we are spending, which, as you can see also in the last 3 quarters, every quarter we've gone from $2.7 million to $3.1 million to $3.4 million in this quarter. So you've seen about a 10% increase in spend every quarter, and we will try and continue to do that.
Right. And on the profitability side, some of this investment in the Nordwin and also the mix change that has happened, you said difficult to gauge how these things will keep moving. In that light, will it be a better idea to share the Nordwin core business margin separately to understand how that business is shaping up, and either identifying the revenue and margin for OML, Wings, Playground as a separate data? Probably that would give us a better idea. And also, any change in seasonality of this business that you foresee now, given that offline is also on, and now some of these businesses may not be as seasonal. So what should be how we should see the seasonality here in Nordwin?
Sure. So I think 2 things, right? The business mix of Nordwin right now is changing very rapidly quarter on quarter, because there have been multiple new businesses and new business lines that have been introduced. We would like to see it stabilize, before we start carving out and, sharing individual line items. But surely in the coming quarters, we will intend to do that. In terms of seasonality, I think it's broadly the same. H2 will, always be more than the H1 in terms of revenues. Although there will be some balancing because of the game accessories business, which has Q2 as the largest, driver of revenues. So I think it will normalize to a certain extent. But this October, the Q3 and Q4 is a time when most of the, physical events also take place because of the better weather, etc., in the country. So I think broadly the seasonality will still continue.
Right. And Animal Jam, I sorry missed your comment. So when we see this margin and growth coming back into this business the way we would like it to?
Like I said earlier, we are very actively working with the team on multiple fronts. And I think I would give it 1 or 2 quarters to stabilize before we have very clear visibility on growth. But the more we work on this product, the more we see, low-hanging opportunities for ourselves. So we remain convinced that this was a great IP to buy, and there's a lot that Nazara will be able to do here. Hopefully by next quarter, I will give more visibility on more specifics around Animal Jam.
So you're saying for 1 or 2 quarters, probably the margin would be low and growth would be stable, and then probably some of the action that we are taking would fructify over the coming period.
Yeah, because we want to make sure that we get the hygiene right? We have full grip on data. We have the right customer acquisition channels. Now we have completely given user acquisition of Animal Jam to DataWorks, which is an internal team now starting to work very actively on. So I think the whole idea is, before we start really scaling this business, we want to make sure we have a complete grip on all the levers of the business, and then we would like to do that. So I think by next quarter, we should be able to at least, be very comfortable ourselves that we have, all levers in place. We've kind of addressed all the low-hanging opportunities. And then once we are satisfied with, the potential LTV, lifetime value, and the cost of customer acquisition across multiple channels, we will start scaling this business up.
Sure, that's very helpful. Lastly, if I can just squeeze in one, which is on the ad tech side of the business. Here we are seeing consistent growth, but margin is coming off. Is it because of some pricing pressure given the macros we are in?
No, we've not seen pricing pressure, but I think a lot of new customers have been added. As new customers scale, we will see overall better margins. So I don't think it's much to do with pricing pressure. The company's grown fast. Introductorily, we do better pricing for customers till they get to a certain scale. So I think that's what's being demonstrated on the margins.
So 8 to 10% is the range that we should keep in our mind for this business?
At this point of time, yes. I think there will be many ways for us to optimize and increase these margins. We will focus on this in the coming year.
Okay. Thank you. I think you've done exceptionally well on the gamified business side, and these metrics are very encouraging. Hope you have a very great year forward. Thank you so much.
Thank you, Rao.
Thank you. We have the next question from the line of Mukul Garg from Motilal Oswal Financial Services. Please go ahead.
Thank you. I hope my audio is clear. Nitish, good morning. Again, I think fairly broad-based growth and a good job this quarter. Had a couple of quick questions. First, a bit following up on Rahul's comment on Nodwin. Is it possible to kind of give some sense of what was the core growth in Q3? Because Q3 historically is the strongest quarter, but this time you had Master Series in Q2, you had accessory seasonality which kind of played out, while Q3 NS7 and multiple other offline events also started. So how should we look at seasonality? Q4 again in past has been the low season because of exam and other kind of issues which kind of act as a headwind. Has that been going away now, and will it be more broad-based?
Sorry, your last sentence kind of broke up. Can you just repeat that, Mukul?
So, will the kind of performance in the Nodwin business be more broad-based than a Q3 heavy kind of a kind of impact given the multiple events which will be there across the year in the offline model?
Yeah, I think more or less, yes. I would say, Q4, for example, with more events will, also do better. Q1, Q2 will also see better. So I think overall, like I was saying earlier as well, we will see more normalization across quarters. We still think at least into FY24, Q2 will be a larger share, but the percentage may drop vis-a-vis H2 versus H1, and difference may normalize a bit. The mix is rapidly evolving. We think events will continue to grow, especially now with, as we were discussing earlier, like better recognition of esports. You will see much more, audience coming in, much more players coming in. So I think overall we are very positive on physical events, online events, the media rights, as well as the other businesses that Nodwin has got into. Holistically, I think this business should continue to grow into FY24. At the right time, we will, Mukul, also focus on margins. It's not that we don't want to make margins on this business, and we will keep a strong eye over there and see whatever we can do, but at the right time.
No, I completely agree with you. Just a second part on, following up on the recognition angle. SROs, obviously there has been a lot of fear in the industry due to the kind of mixing up of RMG with esports. How receptive is government to kind of look at them separately and not do a mandatory your registration or validation of the users?
Yeah, I think we are obviously engaging with the government, and the entire industry is engaging with the government. I think a lot of the regulation right now is focused on where money in, money out is involved, right, in games, which really focuses the entire activity or the regulatory activity on the skill-based RMG side. And I think that's really the key focus. I think some better definition comes out in the regulation once it's out will be good. But I don't see esports or our premium business or other businesses impacted by this regulation. I don't think they are the target at all.
Right. So you expect, kind of the regulations panel wants to come out a bit differently from the current clubbing?
Yeah, I mean, they put out, for public opinion feedback, including the industry, and I'm sure they're incorporating, reviewing all suggestions, and the final guidelines will address, concerns that have been raised.
Sure. One clarification on Qdopia. How should we see the flow-through of the price hike and the new users kind of coming into revenues? Will the average pass-through happen over a 6-month period, or will it be a longer impact as the previous pricing kind of gets into revenues?
Yeah, I think as you are seeing quarter on quarter, there has been an increase in ARPUs. I think over the next couple of quarters, at least you will continue to see that because, we've increased, we took one price hike in the previous quarter and one price hike in this quarter. So I think we've, made some good 30% increase over there, which is surely going to play out. As new subscribers come in at higher price, this will so, therefore, if we, for example, aggressively scale up our marketing spend and we're, let's say, able to raise our marketing spends, the ARPUs will also raise faster because the mix of the old users versus new users will change. But I think trend-wise, we are absolutely in the right direction in Qdopia.
Yeah, fine. Sorry, if I may take one last question on the premium side, that totally that not too much discussion happens on that. Your DAUs and MAUs has been fairly stable there. Now, I know the dynamics are not extremely favorable in that space, but you have been able to maintain a fairly high profitability there. Why not pour that back into higher advertisements to drive top-line growth given the pace at which the industry is growing?
Yeah, we are making many changes and enhancements in that product right now, and you're absolutely right. In the coming months, we are very keen to increase our marketing spend and scale up the user base there. There are a lot of new updates that are going to be coming out. After that, we are already starting to actually experiment with advertising. Again, we have DataWorks set up a focus team to help us achieve that. And one of our targets is to see how we can really scale WCC to the next level and not remain kind of plateaued as it has been in the past.
Super. Great. Thanks a lot, Nitish, and all the best for the rest of the 23.
Thank you, Mukul.
Thank you. We have the next question from the line of Deep Shah from B&K Securities. Please go ahead.
Yeah, good morning. Thanks for the opportunity. Nitish, if you could just explain or rather kind of highlight some of the events which you plan to do in this year. So I see a slide in your presentation, but what are the games that we are looking to target and scale up, given that I don't think BGMI is coming back anytime soon. So one was that which games in India are we going to now target, or are we looking to scale them up, or create IPs? And are we looking at international events because some games have a large international audience also? Can we do that in the esports segment? That is my first question.
Sorry, your last line broke up. Can you just repeat that?
No, I'm saying that, say games like BGMI, where we have a good hold, they have a massive international audience also. So are we looking to host these events outside India? Any plans on that, if you could just share?
Yeah, so two things. I think one is on what games are we focusing right now on. New State has been one game that has done well. Valorant, I think there's a big opportunity, and the Nordwind team is doing a lot around that. Interestingly enough, even in DreamHack, we saw a lot of success with online chess. So we're also looking at that opportunity. So I think we have many games that we can kind of play with. On the global opportunity, we are evaluating and also trying to work with publishers to do international events with them on a much larger scale, and perhaps those events, could be also broadcast in India. So I think that's the line we are trying to kind of take on the games that are not very active in India today.
So yeah, thanks for that. But if I can just ask a follow-up here. So we've kind of been organizing international events already maybe not standalone, but in partnership with others. So is that the right assessment, or we were just, or we've not had international events done? I mean, what has been international presence in organizing IPs?
No, we have always been, active in doing international events outside of India as well. And we did, for example, even the PUBG events for South Asia in Q3 of FY23. So it's not something new that we are going to do. We have always been active on it. We are doing it as we speak, and we supported Tencent in Dubai for PUBG. So I think there is a lot of activity there and a lot of growth opportunity for us there.
Right. Nitish, secondly, on this real money gaming space, so yes, I completely buy your point that there is a lot of flux right now. But given that how polarized the space has become, where do you find our sweet spot is? Because cricket is completely dominated by one large player, and then I think they will try to enter in other sports also. What is that sweet spot that we are looking in, say, Rummy or create a platform? So what is kind of the blue sky scenario there?
Yeah, so I think obviously, today's classic Rummy business that we have under open play, right? It's approximately 5 crores a month business, which from a RMG scale is extremely small. What we are really focusing on is building a very powerful platform. We brought in a new CEO in that business in the last quarter, who's also come in and worked a lot on the tools and the data that we are operating with, really kind of enhancing the funnel that we operate in. So I think we have two thoughts here. One is, how can we accelerate the growth of the business, the existing business, by being more efficient, by being able to target users better, by being able to generate higher ARPUs, by taking advantage of the Google Play opportunity that is presented in front of us, etc. Right? There are many things we can do to kind of accelerate this core business. But at the same time, everything that we are doing to accelerate this core business, can that also become a launch pad for many other games that we can drive alongside. So that's one thing. That's the organic part of the RMG growth. The second is, I think, as over the next few months, as both regulatory clarity emerges as well as taxation clarity emerges, we will not shy away from, consolidating other games and other players on this open play platform. Because I think in this case, liquidity sharing, etc., could be very powerful. Cost efficiencies could be there, and we could actually create 1 + 1 = 3. So I think scaling up RMG is very much on our mind as the regulatory clarity is coming out, and we will see how we evolve this into FY24. In the meantime, organic growth is the strong focus for us.
Okay, Nitish, stands for insights.
Thank you. We have the next question on the line of Nitin Jain from Fairview Investments Private Limited. Please go ahead.
So first of all, congratulations on the execution. My first question is on the overall business. So since the IPO, the company has maintained that it would be prioritizing growth over margin, but also make sure that the growth is profitable. But if you look at the consolidated numbers this quarter and strip out the other income, we have actually made a loss at the PBT level. So my question is, like going forward, how far would you be comfortable allowing the margins to dip to achieve growth? And my next two questions are on the gamified learning business. So the pleasant surprise this quarter has been the growth in the Kiddopia business, and assuming that the decline in Kiddopia subscriber base has bottomed out now. Does your revenue guidance for the year include a growth in the subscriber base? And regarding WildWorks, can you talk a little about the unit economics of WildWorks business and whether we see any opportunity for price hikes here as well? Thank you.
Sure. Thanks, Nick. I'll answer all three questions for you. The first one, I'm not sure I grasped properly because our EBITDA was 30.6 crores at the consolidated level. Other income is not included in EBITDA. So I'm not sure whether I misunderstood your question. I'll just answer the other two also, and then we can come back to the first if you wish. The second one, in terms of Kidopia, yeah, absolutely. We've grown 3.7% on our subscriber base this quarter, after many quarters of flattening out and some couple of quarters of decline. So I think we are very excited about seeing the growth coming back. Given all the unit metrics are trending positively, we have encouraged the team to scale the spends and grow the subscriber base. So we should continue to see subscriber base growth. I won't be able to put specific numbers there right now because it's the first quarter of growth and we need to see how this is trending over the next quarter or two. In terms of WildWorks unit economics, like I said previously, there's a lot of work in progress, a lot of different things happening and a lot of moving parts. So I think it's a bit premature to get into a lot of specific unit economics of WildWorks, but at the right time, once things are stable, we will start presenting almost exactly the same KPIs and unit metrics that we provide for Kidopia, given that both businesses are very similar. Lastly, I very much think that there is a lot of potential to increase pricing in WildWorks. It's been untouched for maybe the last 2-3 years, and there are many different ways to do it, and it's all work in progress right now.
Okay, thank you. So just to clarify my first question, so while we have been flat at the EBITDA level, at the PBT level, if I strip out the other income, on its own, the business has made a loss this quarter. So because of the significant margin decline. So if you can just clarify that, please.
Let me just open that page for 1 second. So our final PAT. Look, I think there are two things here. One is on the EBITDA level, we are flat. That I think is okay for us. We've done 306 million or 30.6 crores EBITDA consolidated versus 30.3 crores EBITDA at the previous quarter year on year. Our thinking same as long as we are going in the right strategic directions while maintaining profitability and cash flows, we are okay with it. I think one thing is on the PAT, you must realize that we take a fairly large amortization of the acquisitions that we have done, which are non-cash amortization. So I think from a PBT perspective, that kind of colors it a bit. But even then, I'm seeing on my numbers, I'm seeing a PBT of 285 million or 28.5 crores. I remove other income of 11.5 crores. It is still positive. So I'm not still very clear where you're seeing the loss.
Okay, I'll take it offline then.
Sure. Thank you.
Thank you. We have the next question from the line of Ankit from JM Financial. Please go ahead.
Hi, Nitish. Congratulations on a great set of numbers. So I have a couple of questions. First one on the unique wagerer count in the RMG segment for this quarter. If you can give. So last quarter it was around 27.7K. I think this quarter you have not disclosed that in the presentation.
Sorry, your question is why the unique paying consumers?
Unique wagerers.
Yeah. Why that is declined?
So just the count of.
I'm not getting your question.
Ankit, we can't hear you very well. If you could kindly go off the speakerphone and repeat your entire question.
On the unique wagerer side, if you can just give the numbers of average monthly unique wagerers for the quarter, that number. Last quarter was around 27.7.
It's only there in the presentation, 23,690.
Okay. And then second question on the AgTech front. So, AgTech is usually, this business is seasonal. Third quarter seems to be a seasonal quarter for all the businesses. So do you, in the fourth quarter, I mean, would that growth remain there, or what is the growth that you're targeting?
So AgTech, you're right, October to December, because our AgTech business right now is focused in the US, and the October to December runs up into Christmas, right? So brands are spending the most during this, and then they drop off the spends in the first quarter of the year, or the Q4 for us. The spend definitely drop off. So there is seasonality that builds up in Q3 and then normalizes in Q4, and you will see the same thing happen this year as well. But on an overall basis, we will continue to see a good growth year on year on this business.
Okay.
Thank you. We have the next question from the line of Pranav from Dolat Capital. Please go ahead.
Hello. Yeah, hi. Am I audible?
Yeah.
Hello. Yeah. Just a quick question on Sportskeeda. So I think the revenue rate for Sportskeeda could have been better given the seasonality, and even the margin profile when we compare on a Y&Y basis, they have declined a bit. So could you just give a sense of how you're seeing Sportskeeda and any takeaways with that were specific to this Q3 quarter? Thanks.
Yeah, no, I think we continue to see good growth overall on Sportskeeda, and we're satisfied with that. The margins are, I think, we've also opened new sports that we have kind of built teams on, some new areas that we're investing in. So I think some of the margins are, potentially would be slightly lower because of new investments that we are making in teams and content, etc. If you see our growth in terms of the average MAU, right, that has also steadily increased. Even in this quarter, it's 76.9 million, up from 72.8 million. So I think overall, it's a healthy business. We continue to be very happy with it, and we continue to invest in new areas within that to see how we can drive growth for FY24.
Sure. Thank you.
Hi, this is Sudhir here. Nitish, can I just add a bit here?
Please.
So I just want to make a point that on Sportskeeda, we also had a change in the management this quarter, as you know, with Sourav stepping out and Ajay and stepping in as the CEO, stepping up. And with that, there's also been a lot of new ideas and new directions in which we're trying to grow this business. And therefore, there's a bit of investment which goes along with that. And that's reflecting already in terms of the MAUs and so on. But over time, I think it will start showing in the margins as well. Just wanted to add that point. Thanks.
Thanks.
Thank you. That was the last question. I would now like to hand it over to the management for closing comments.
Thank you, everyone, for all the questions today and for listening in. We look forward to continuing with our work and coming back to you in the coming quarter with good numbers and all the strategy ahead for FY24. Thank you again.
Thank you. On behalf of Elara Securities Private Limited, that concludes the conference call. Thank you for joining us, and you may now disconnect.